All right. So thank you everybody for joining me today. My name is Gabriel Brent, and here is a picture to go along with the fabulous voice that you are hearing right now, and a little bit about myself. So I'm not going to spend too long reading the slides. I want to get more into the good stuff. We have a lot of cool stuff to cover as it is December, and we are going to be releasing some new upgrades as well as expansions to the software packages. Okay, so we're going to go over the basic zone theory, what is market memory, how the zones work, and really the zones are just an evolution of my personal trading journey and voyage. But as always, with trading, there is a substantial risk of loss, so please factor that in before trading any live monies. So with that being said, getting back into the whole idea of really what's going on here and what we're trying to capture is a very easy concept brought forth by Adam Smith. Now, I'm sure many of you here have probably seen this particular setup before, and obviously we have an X and a Y axis over here of both time and price, and we can see the supply and demand curves shifting throughout time. Okay, but as we look at the chart, or as we look at the markets, how do you identify this concept? Well, I think that's a really good question, and the way that I like to do it is through reading the bars. Okay, so if we have supply and demand, we're looking at the right side of the chart here. If we have supply above demand, an excess of demand down here, an excess of supply up here, you could consider these zones, if you were. Okay, and so you can see how price is shifting throughout time. Time being very, very important, and we'll touch on that a little bit later. And we can kind of see how that works on a basic concept, without any price movement or anything like that on a real commodity or index or stock or future contract or forex contract. But that's what it looks like, right? So what do we make of the price bars, and how do we take those simple principles and apply them to zones and zone theory? Well, what zones do for us in being able to identify those areas is it gives us context, and I think that's really the big thing that I want to share with you guys is by understanding this approach and this technique, we gain market context. No, this isn't a standard deviation of a moving average or some type of overbought, oversold oscillator. This is price action being played out in market memory, and what is hidden from our charts is made visible with the zones because we're seeing what price has been showing us over time in relation to these ideas of supply and demand. And that's what really the Apazone software does very nicely. Okay, so on the right hand side of the chart, first and foremost, we are going to see these levels in red over here. And you can see this is a very colorful chart. I mean, like, you got all kinds of crazy colors jumping out all over the place. So we have all the levels in red. These represent supply levels or resistance levels, and then the zones that have little green numbers by them represent demand levels. All right. So that's the basic idea: is getting market context from price action, letting the market memory dictate to us where high is and where low is, all right? And then we keep track of those areas because over time we will see that those, the supply and demand curves shift, okay? And I think time is extremely important, and we can actually put time into the equation in a couple different ways. And I feel time is so important in understanding supply and demand and support and resistance that I've come up with like a little equation So support and resistance plus time equals supply and demand. And we're looking at these areas as zones. The support and resistance isn't just a line on your chart, but it's bigger than that. You know, the market moves dynamically. There's a lot of different market participants. There's all the retail traders, all the institutions. You know, the dark pools, all those different participants, and we need to give price a little bit of flexibility, you know, throughout time. So as we're watching price action and watching zone theory, we can see price move back and forth in between these areas. And actually, going back to this this Euro chart, this is the Euro USD on a weekly chart, nonetheless. You can see kind of how price has been moving along. All right, so and really what I like to capture is the first time price interacts with one of these zones. That's what I consider the money bounce. And if we look over here at this chart, we see the exact same things. So let me go ahead and apply the zones to our chart here. And you can see the exact same deal that we saw on the previous chart, except we can see not only did it bounce back and forth in between the area like before, right? But it actually went through, it went through this zone, this little blue zone here. So we have a shift of supply and demand, which is right there. We went through that zone. We touched the previous, or the next zone up there, and it kicked off that zone really, really hard. Came back down and found support or found demand. Notice this level's in green over here. So we found demand over here, and then we kicked off that level, and we're looking to retest this high. Okay, so you can kind of see how this zone gets taken out here, and we have the shift of supply and demand over time. So obviously these two charts, you can kind of see the continuation of what's gone on here in a very long-term type of application off of a weekly chart. Now, not only does this stuff work off of big weekly charts, but it also works off of our small 1-minute time frames, off of our 5-minute time frames, off of our 124 tick charts. It's the same type of idea. There's a fractal pattern that is created in price action, and once you learn what it's actually exposing and how market memory and how this almost like hidden order flow goes throughout time, it really is very, very cool to see it happen. Okay. The other thing that I've noticed as we're talking about time is these lines shift. You know, you saw this this zone disappear off of our charts, you know, and price react to the zone just above it, and a new zone that was created in between these levels. So price shifts throughout time, kind of like what we see on this curve. And how I look at that is, as it's shifting over time, there's a few different things that can really move it. One being time of day and news. Okay, so when news is released, we can a lot of times see price action do crazy things. And I'm going a little fast here, so this is crude oil inventories, just so that we can wrap it up. But the expected was, the actual was 0.3 mil. What was expected was a minus 1.9. What happened was actually it was unchanged. So what do we expect to see happen here? All right. Just out of curiosity, what would everybody say should happen with crude oil if they're expecting a minus in crude oil inventories, and it turns out that it was unchanged? Any ideas? Go down, 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 down. Well, I think you guys know something here, or maybe I've possibly seen this before. All right, so yes, price actually did go down. And just to give you a little bit of context, and I think context is very, very good. And I know some of the members of the Apazones community are in here, and they've actually seen me go through this presentation before. So I'm going to change it up for next week, just so that you guys have no idea, and you'll have to really think on that question there. Anyway, so just to give you a little bit of context, we have a 15-minute chart. I really like 15-minute levels. They just seem to work out really, really well. Today in the crude oil market, the 15-minute levels worked out extremely well as well today. So we have a 15-minute and a 500 tick chart. And you can see that the inventories really did speed up the move, as this is the inventories and what happened during that particular area. So if we're looking at the right side of our chart, APAZones is obviously all over these two time frames. You can see that we have a 60M printed over here in red, which stands for a 60-minute zone. So we're taking bigger time frames and applying it onto a smaller time frame. And that helps us give us context of price action. Again, it's not a standard deviation of price or anything like that. This is where price has been in the past, keeps track of those areas, and it helps us really see what's going on behind the bars and why the price action is turning out the way that it is. So very, very cool example of news helping us accelerate the move in between supply and demand there. All right. Again, looking at like the top of the day, or excuse me, looking at the top of the hour, which is news time here on the Pacific Coast of 7 o'clock. We're watching price come off of a supply level off of this particular chart, and it comes down and reloads into demand. News comes out at 7 o'clock, and sure enough, price accelerates and moves through supply. Okay, so you'll see a lot of times larger institutions and things of that nature tend to reload in these areas at news time, or at the tops and the bottoms of the hour is what I came to find out. And as I was looking at that, I was like, wow, you know, it's actually pretty cool how all these major moves tend to happen at very specific times a day. So I decided to make a little indicator, which I will be giving this indicator out at the end of the presentation. This is called APA time. We keep track of the times of the day. So the U.S. market opens at 6:30 here, so you can see us painting the bars 6:30, 7 o'clock, 7:30, 8, 8:30, so on and so forth. And you'll notice a lot of times the retracements and stuff happen at that particular time. Okay. Sorry, I need to grab a little bit of a drink here. But that's what I see time in and time out as we're looking at the markets. Okay, so what I'd like to propose is if we have some idea of context of price, you know, seeing where's high and where's low, you know, we're going to sell at the high points and buy back at the low points, and you know, buy low and sell high, and we have a context of time. We now have a better understanding of really what's going on in our market, okay? And it's a very simple analogy. So when it actually comes to trading the zones, excuse me here, I need to take another drink. When it actually comes to trading the zones, just like we were looking and relying on price to determine where these zones were, we're going to look for price to determine when we really want to take a zone trade. Okay, so I have a single bar engulf and a double bar engulf, and in the new APA system, this indicator is actually in the product list now. And it's a very cool type of deal. It's also in the APA methodologies as well, which is our high-end package. And really what it helps us do is to say, all right, well, price is inside of a zone here, but even though it's inside of a zone, is this actually a good trading opportunity or not? Okay. Obviously, price bounced off several times off of this zone down here at the very bottom. Okay, 1, 2, 3 times. We really only want to capture the first time. If it bounces 2 and 3 times, that's great. But it doesn't have to happen that way, because you can see a shift after that first bounce happens, okay? And you can kind of see that we're really in a range on this particular market. So what I like to do is, well, I like to use multiple time frames first and foremost, just to grab confluence of, is this really the high point or the low type or the low point? But looking at a bigger time frame chart also helps too. So looking at these particular areas, I want to see price come into this area, and just because it's a zone doesn't mean price is always going to turn there, because we've seen price shift throughout time already on this chart. Okay, so if price comes down in here, I want to let price tell me to get on board. All right, so it's kind of like thinking about these areas like a bus stop. Okay. If you see a bus come up to a bus stop, it doesn't mean that that bus is automatically going to stop at the bus stop. Like, what if the bus is out of service? Or what if the bus is on another route that you don't want to go on, and it's not going to your destination? You don't want to stand in front of a bus just because the bus is at a bus stop. It could ruin your day. Just a little word of advice there. There's your golden nugget for today. Nobody stands in front of a bus at a bus stop, so don't stand in front of price at a zone. Let price tell you that it's going to reverse, and jump on board as big money moves the market. Okay, so that's all I recommend you do, and we can do that by, in my thinking and in my logic, by looking for that single bar and that double bar in golf. Okay, so we have one red candle come into the zone, and then we have one green candle come out of the zone. All right, but this candle does not exceed the previous candle's high. So what I like to do is wait for this red candle's high to be surpassed by either 1 bar or 2 bars after it touches the zone. Alright, so right here at this line, let me draw a line here. Right here at on this green bar right here, we see that high being surpassed. So that's when I would feel comfortable getting in, because price has really confirmed that it's going to the upside, and we're looking for our targets, next zone of opposite type, all that kind of stuff to bring context into it. We want to buy low, sell high. So if this is low and this is high, we're going to wait to sell up at where it's high. All right. So pretty simple, but I just like to let price action confirm each one of my entries. And we're going to get more into this concept here, but that's the basic idea behind all of this, is let price action confirm that it's going to do what you think it's going to do before you jump in front of a bus. No bus jumping. That's not cool. Or bus tipping. Don't try to tip over a bus, because you'll lose every single time. All right. Anyway, so that's the basic ideas that I like to use when entering into a trade. So I use the zones to enter, and I also use the zones for my targets. Okay, so buy low, sell high, right? That's the idea. All right. Now, for me personally, this is just my personal style, but I can sum up my target rules as: my first target is a scalp. My second target is I like to play a range, and my third target is, well, I just like to make it look good. Okay, so that's what I'm looking for. All right, and that's what I look for in each trade, and that's just how I do it. Now, your style may be different than mine, but and that's totally fine. But if we can gain context from the zones, now we really have a good understanding of what we're looking for, and how to scalp and play the range, and really run with the trend if the trend develops. Okay, so that's what I'm looking for. And I know a lot of you here are more experienced traders, so I'm not going to bore you with all this stuff, but knowing what your winning percentage is really is very interesting. And I just came across this maybe like a year ago, But I thought this was interesting. Now, this is a probability of losing streaks, and I really feel like trading psychology is very, very important, and that's why I've included it in each one of our packages. You get help from a trading coach every single time, so that you are able to address those issues of trading psychology. But looking at all of this stuff, we can see that it's actually very interesting. This is a probability of a losing streak. Okay, so what this is telling me here is basically that a lot of people I know, or at least I should say, in previous experiences I know, look to really cut things off after 2 to 3 losses. Okay, so basically, when we look at that, looking at 2 or 3 losses, if you're shooting a 50% chance of winning, you can have 2 to 3 losses, no problem. 2 to 3 consecutive losses. Now, mentally, how is that going to make you feel? That's a real good question. And technically, at a 50% chance, you can have 7 losses pretty darn easily. It's not until you hit, above 80% that 2 or 3 losses really, statistically speaking, tend to be a whole lot less. And I think there's really something to, every trader needs to address is can you take consecutive losses, and how does that affect your day, and how does that affect your account and how you feel about yourself? Okay, so just want to bring that to everybody's attention, because it's trading psychology, and we have a wonderful trading coach. Her name is Michelle Hurlbut, which we'll actually talk to her a little bit later as we get a little bit deeper into that topic. All right. But with the zones and the zone theory, we're trying to put all those statistical probabilities in our favor, so that I can scalp, I can play the range, and then I play a bigger target. Okay, so here's just a couple examples of different trades. Again, I like to use a 15-minute, and you'll notice that we have this Apazones MTF up here. The Apazones MTF stands for multiple time frames, so we can bring in a bigger time frame chart or a smaller time frame chart. We can also mix and match our time frames, so we can grab a tick chart, put it on the minute chart, grab a range chart, put that on there, all kinds of crazy combinations, and just so that you can have a trading system that fits your style. Maybe you really like small stops, so you're going to be looking at 3 range charts for your entries, okay? And so you can go and grab your 60-minute and your 15-minute and your 5-minute and 377 tick chart and all bring that into your 2 range chart, so that you can have an idea of where is high and where is low from 5 different time frames, all on your 2 range. We can do that, and that's something that's very, very easy to do. But as long as you gain context of price action and time, I think that's the first and foremost thing that we're really striving for here. So with this one, we actually had a gap. Gaps are very important, as well as I like to use trend lines in my trading. So we had a gap all the way down here to what was actually 60-minute. I don't know if you can see that or not. And so we're looking for a gap fill, and obviously that happened. I also use time of day. You can see like the background is changing its style there, and you'll see a lot of retracements at the tops or at the bottoms of the hour. Technically, this was at the top of the hour, so this is at 6 o'clock Pacific time. Even though the background doesn't change right there, it technically is, just because I like to use a window of 5 minutes before the hour and 5 minutes after the hour, okay, as the time zones. And we just have a couple other trades, and I'm not really going to get into all those today, but I think the big thing is understanding context. So even if you're on a 1-minute time frame, if you're using 4 or 5 different time frames, which you can see I have several different zones up there from different time frames, I have the 60-minute time frame zone showing. You can see that we move from a 60-minute supply, that's in red, to a 60-minute demand down there in green. Okay, so that's the kind of stuff that we want to capture, is just writing the moves in between supply down to demand. And I'm really looking for a very, very simplistic style of trading. I don't think trading will be very easy, and if anybody tells you trading is easy, they're really trying to sell you something, and I would, I would look another way. But I do think trading can be simple. So that's what I like to do, is try to make trading very, very simple. You'll see that there are a couple different arrows plotted on this thing and lines. This is the APA methodologies actually firing off here for us. And we'll get into that piece of software here very, very quickly. But if we can understand context, it can actually help us out to avoid a lot of the traps that large institutions like to play on us. For those of you that are watching price action, you can see that a double top was formed, and we actually surpassed that double top. And this is the multiple time frames kind of all drawn out in different charts here. So we have a 60-minute, a 15-minute, and a 5-minute. So you can see that we surpassed the double top by just a couple ticks, but we did not surpass the zone. And you also kind of notice how these zones are all a little bit smaller than one another. And that kind of shows you the fractal nature of the market as well. And then we had our little single bar engulf, is what I would consider this pattern on like a 5-minute time frame. And it looks like price reversed back down to the other's demand zone down here, 60-minute demand zone. So this happens all the time, and it's very, very cool to see. We actually like to share all this stuff in our APA pub, which is our live training room, and all of you are invited to join us there. We ask that you do trade the zones and are familiar with that, or really into trading price action and zone type concepts. And inside there we also have our trading coach, Michelle Hurlbut, who really specializes in trading psychology. And I think we have Michelle in the room here with us just to speak a little bit more into those ideas of trading psychology. And I really want to let her talk a little bit more about that and what we are trying to do with all the different APA packages, as she actually does all of our installs and whatnot in training. So if you come over here to the APA packages and click on install and trading, you'll get a better insight of what she does. But I'll let Michelle take it from here just to walk through what she does and all that. So, Michelle, are you there?
I'm here. Hi, Gabriel. How are you?
I'm doing well. I'm doing well.
Glad to hear. Glad to hear. No buses. We don't want to get in front of any buses. We also don't want to do any bus tipping. That's kind of strange. Never tried that one.
It's like cow tipping, except more interesting.
I'd have to say, you got to have a lot of strength to tip that bus over. Anyway, I help traders with trying to, new and experienced traders, trying to get things just kind of the way they need it. A lot of traders have some emotional issues. In fact, all of us pretty much do when it comes to trading. And they may not be big deals in our daily lives, but when we get involved with trading and when we get involved in this, it's basically a solo career. You're responsible for all your goods and bads, and you're responsible for getting up in the morning and going to your desk or possibly your office and trading and making money, or sometimes on some days not making money. And the emotions that we have through that vary depending upon what we feel is good and bad, and what we feel is fear, and sometimes greed, and sometimes the missed opportunity. All these different things come up with new traders. Sometimes new traders aren't quite sure where to begin. They've learned so many different ways to trade, so many things that they can add to their charts or take off their charts, and they've tried them. Tried them all. And the more you have on your chart, the less you can see what price is really doing. We have a tendency when we have more things on our charts to give ourselves, one, more excuses to get in, and then two, more excuses not to get in because they're conflicting. And we don't know what to do in those situations. And you've heard from so many people, so many different people that use this way or that thing, and they do well. And so you want to do well like them. So you've added that to your chart. And then you hear another person that uses this, and they do well, and you want to do well, so you've added that to your chart. Next thing you know, you have a multitude of things, and you're not quite sure exactly what you're doing. You know trades are there, and then you get the emotions in there, and it kind of analysis paralysis things a lot of times sets in, along with our fear of being right and wrong. So what I do with each new AppAzone member is, one, I install their AppAzones on their charts, get them up and running, make sure they're working well, show them the couple of little tricks and nuances about it and things that they can do, and then I also give each new AppAzone member 2 30-minute personal coaching sessions with me. And each of those coaching sessions are geared towards the individual. So if you're a new trader, then we work on your trade plan if you don't have one. If you're an experienced trader, then maybe there's a couple of, lay on my couch type of issues that you want to just talk to somebody about. And just having someone else to talk to about these things creates a very comfortable atmosphere for you to be able to come to a good resolution of them. So those are the two things that I offer to new AppAzone members. And of course, if you would like to continue on with the coaching, that is an option. I also do neurolinguistics programming techniques for helping with larger barriers. Some people have larger barriers to emotions or to their feelings about money, fear and greed, and so I do offer a little bit of a more extensive opportunity to get rid of those. A lot of people don't need them, some people do, and it's always best that if you need them, you know who to go to. So that's what I offer in the AppAzones room. And then, of course, anybody's more than welcome to ask me any questions when I'm in the room. We get into, in our morning webinars that Gabriel has, the AppApub webinars in the morning, we get into different topics of this emotion or that emotion, why somebody moved their stop, why they didn't, or maybe that they're having a problem with doing something like that, and where could it be? And so we'll chat about that for a little while, and everybody gets to listen to that. So everybody gets to say, oh, you know what, that kind of fits me, or that doesn't fit me now, but this particular thing that was said really kind of hits home for another topic. So it's the personal aspect that you're getting with AppAzones that really makes us special. And we like to treat everybody like family.
Yes, we do. Yes, we do. So we have a good time in the AppApub, or at least I do. And trading in front of everybody. It's taken me a while to actually be able to do that. Just to overcome those emotional and mental things, as Michelle has pointed out there, So thank you so much, Michelle, for chiming in there. I really appreciate everything that you do. And it really is a community of traders. So I really feel like that is part of the community that we're trying to build here at AppAzones. This isn't a place where you're going to get a lot of smoke and mirrors and and things of that nature. It's not buy our system and we will make you into a profitable trader. This is going to take work. I know a lot of you here are day traders. It's going to take some time for sure, but if you understand context and you understand the emotional battles that you're facing, it really does help. To keep yourself into check, maybe from micromanaging your trade. I hear that's probably one of the biggest things that I think everybody struggles with is micromanaging their trade. You put on a trade because it's a real good setup, and then you find yourself micromanaging it and getting out too soon or whatever have you, and not letting your runners run or changing your mind and closing the position, whatever have you. So, but with the APA zones, what we try to do is create that community, run through our Skype room mostly, but we also run it through our website. So in the website, we have all kinds of information underneath the members section. We have, I feel like it's 100+ hours of video. Here's the price action school, just so that you can understand how we take price action and how the zones were developed, how they work, what they're looking for, and what the tool does for us, how it applies to multiple time frames, how we put it all together with the price action candles. All of that kind of stuff is inside these different videos here. And all these videos last about an hour to 2 hours in length, and that's all in the member section. There's a lot of other how-to and training stuff in there. We have trading psychology stuff. We have trade plans from other traders. Inside the Skype room, we do like to share a lot of trades. So here's some trades from one of our traders today. And you can see he has very colorful charts. He's using the APA time tool, and he's apparently painted his times like an orange and a red color, so like a rose color or something there. So just very colorful charts, and you can kind of see the different trades that he put on throughout the day. Okay, and if you look at the Y value, you can tell how much he made there. Considering that he was going short through the day, that minus number there on the NinjaTrader ruler doesn't matter so much. But we have it both available for NinjaTrader and TradeStation. Just to share with you guys a little bit, something that I thought was cool about this was he was actually in the pub with us today, but he took this thing from basically the 15-minute up here. You see like the 15-minute zone, the 15M right there. And look where that next 15-minute supply is down there. Okay, so he took it from 15-minute down to 15 minutes, and obviously he was looking for the runner that didn't happen, but he managed, I think, this runner very well. So good job. And we share stuff like that every day. I share my trades and my setups and things that I see and how I read support and resistance and supply and demand, all inside that pub room there. So we just hope that it's a really great place for everybody to learn something and to share their knowledge. So with that, I'd like to extend an invitation for you to join me tomorrow to see everything happen in live market conditions here. I'm going to paste a little link here in our room, in our little chat session here. So if you guys would like to see that, you're more than welcome to. Just click on the link in the chat of the GoToMeeting, and you can see that there. Okay. The other thing that I would like to give out, and like I said today, was the little APA time tool. So let's see if we can actually find that here. Well, actually, I know what the URL is here, and I'm going to paste that URL in our little chat box as well. So if you click on the little link underneath the GoToWebinar link, you can download App-A-Time. So what App-A-Time does is it really limits the number of trades that I take a day, because I want to trade really close to those times as possible. All right, and how we kind of put this all together is in the following way here. All right, so let's bring up our charts here. Okay. So coming into a session kind of like this, what we do is let's just look at the YM, since it's a little bit different here. This is actually starting at 6:30. You can see price dipping down in here. Oh, I thought I had my things applied here. Hold on one second. I'm going to get into the APA methodologies here, which is kind of a well, it's the biggest and baddest product we have on the website. If you go over to the website here, you can see all of our different products under the product comparison deal. So that is there. I'm putting that into the chat as well, so you can see what all the products are. And for another little special today, you guys can also come to this link here to sign up for a month paid trial instead of the actual purchase prices that are on this product comparison page. Okay, so that link is good for 24 hours from this morning. So tomorrow it will be shut off at about 12 o'clock noon. All right. So that little link is good, and it allows you to do a paid trial for a month, and that amount is actually applied to purchases. But as we get into the analysis here and what this stuff is all doing, you'll see that with APA zones, I really try to make everything very heads-up oriented. All right, so we have a zone plotting down here, and lo and behold, at 6:30. It's a retest of this new low that was put in, and we get the APA methodologies firing off a little signal here. Okay, so we had a red candle touching the zone, and then two green bars engulfing the red candle, which means price action has confirmed that zone for us and gives us a long signal. All right, now that long signal actually could have taken you through the majority of the day, and you can see that it plotted in our time zone as well. You'll notice that the first 15 minutes, which is this little green area here, or time zone, it's a lot smaller. It's only about 3 minutes in length, because we're looking for a lot of times a retracement to happen at the first 15 minutes. Don't know why it happens as such, but it does. Okay, it either retraces in the first 15 minutes, or it's an extension into a zone of the opposite type. So if this thing was way up here at yesterday's close, which is labeled right here, if that was touching that yesterday's close level, we could look for a possible reversal of the move to the upside, and it may be coming back down and actually going lower. Obviously, it was a retracement type of deal with the new high standing up there, so we got that up there. And then a failure to break the previous high, and we have a down signal. Okay, so you can kind of see how that looks. Again, this is a double bar engulf because we're playing off of a range chart. You can kind of see the retracement as it comes back down into here. Obviously, this thing did kind of a double dip. Okay, so it looked like it was going up, but then it just came back down just a little bit lower, and came back up again. Okay, so you can kind of see how this thing works at the given time perspectives and the basic idea of what we're looking at here. Now, not only can we take this chart here, but we can also grab multiple time frames. I think we actually had a question here. Is the MTF overlay only time or any reference chart? Okay, that is a good question. You can actually take the APA, excuse me, not the APA methodologies, but the APA zones MTF, and we can bring in minute tick. We can bring in any of that stuff, just as long as it you set whatever time period that you want in there. So if you want to bring in a tick chart or a volume chart, you can definitely do that. Not a problem. Or if you want another range chart or Renko chart, you could do that too. So that's all there. And let's just go ahead and apply minute time, just because I like the 15 minutes. So I'll apply that to there, and I'll hit OK. And now we see, let me turn off these zones here just so that we make it very, very obvious as to what's happening. We see this 15-minute zone, and I'll fill this in just with a little bit of color. Notice that these two 15-minute lines, they're just lines and they're purple. Okay, they are not, there's no filled in color here. And the reason why we did this was I noticed as I developed the multiple time frame deal, like if I fill in that color, your chart just gets really, really busy with all this stuff being plotted, and it leads more to that trading paralysis, because all of a sudden you see all these different colors meshing with one another, and they all turn either brown or gray for some reason, and it doesn't help. So, and the reason that I feel like they turn brown or gray is because you are seeing the fractal nature of the market. And the more time frames, if you're overlaying 4 time frames all into one chart, you're going to be seeing the small zones inside of the large zones, inside of all kinds of things like that. So here's the 15-minute zone. And just to show you that fractal nature of the market and a little bit of the harmonics inside of there, let's go ahead and show the active zone. And you can see the active 4 range zone is at the bottom of this. A lot of times we'll also have another zone at the top of this. Okay, kind of like up above here. All right, we see the Globex high level, which is all these little triangles. And Globex high is these red triangles. Globex low. And Globex, just for those of you who don't know, means how far did price move when it wasn't during like the U.S. session in this case. Okay, so Globex high is up here, and you can see there's a 15-minute and there's a 15-minute, and inside those two, or inside that one big zone, you have these 2 4 range zones. One's at the top part of it, and one's kind of in the middle. Okay. So and then we can also see the bounce count, which means, we've had one bounce on that zone, and this zone right here is aqua. So when price comes up in here, we're looking for that money bounce. So we're looking for this aqua zone to turn blue. So price needs to hit this zone and then turn around in the same direction it came in before it touches this blue zone. Is what we're looking for. But again, this is a 4 range zone. These are 4 range zones, so how well are they going to hold price in and of themselves? Well, we like to take the confluence of multiple time frames into the real application of this. Okay, so that's really what we're looking for here. So we want to make sure that there's some very nice confluence of a particular zone before we, get in the bus. Let the bus stop at one of these zones and then jump on board. Okay, so that's what we're looking for. So I hope that makes sense, and just so that you can kind of see what the zones have looked like through the future here, or through the day, you can kind of see how the zones have formed here. We are looking at identifying areas of consolidation is the idea behind the zone logic, and I think it's time to actually get into some more of the technical stuff here. But I do want to answer one question. Um, but if you buy when price surpasses a previous bar as your zone, then it is not more buying when prices are below. Not sure exactly what that is referring to. Not sure about that question, Ivan, but if you want to maybe re-ask it in some other fashion, maybe I can answer that for you. Now, when I'm looking at that particular setup, and I think just these examples here on the range chart, we can also do this to a minute chart or to a daily chart if you're a swing trader, which I know there's a few different swing traders in here. So I'm looking at the time of day. So for me, I'm looking at like at 11 o'clock, let's just say here, and we have price being these two green bars surpassing this red bar. Okay, and you can see that it's plotting out the signal, and as soon as this red bar plots above this and this bar closes, then the little arrow will pop up. Okay, but I wanted to make sure that price is gonna really stop here, because I mean, look at how many times this zone has been retested throughout the day. I mean, it's brown. So if we go into the actual indicator settings under here, you can see that every time a zone is touched, and this is the same for all platforms that we currently support, as well as Sierra, which we're working on releasing the first version of AppleZones for Sierra right now. You can see that we go from aqua to blue to orange to purple to brown for 4 more bounces off of a zone. Okay, so that's what that means. So yes, the arrows are indicating that price has confirmed the zone. Okay, so you could consider those triggers. Are there any other things that need to be considered before buying or selling? Yes, I would say so. I would like to consider the bigger time frames. So like for me, the 15-minute, being inside of a 15-minute and getting a buy is a good sign. Okay, we like that a lot. Being into a 15-minute, you can see this is a 15-minute supply that just formed. You see where it's yellow right here, and it says 15 over there. This zone actually popped up right here. Okay, so over time, over the price action of the day, this zone developed at this point. All right, so when we come into supply, and it's, let's say, at like 12:30, and you have a sell signal in the 15-minute zone, and you have price leaving the zone as such, you know, take this just from one level down to the next. You know, make it really easy on yourself. Of course, I would like to see a scalp target in there, and maybe a range target of some sort, or maybe that is your range target, and you pull something out for like 100 ticks down below here, so in case it does break out to the downside, and you're thinking downside for the trend, you're in a good position for a possible down play. All right, so that's what I like to see. Looks like we actually got another bounce off of this brown zone at the end of the day here, though. What is my profit ratio? Well, that's a good question. Technically, what I like to do is I like to scalp my first target at a 1-to-1 or slightly inverted, just because I want to be able to pay for this trade. So I want to make sure that the trade is paid for at my first target. So even if I do get stopped out up here, I am good to go. Okay, so no harm has come, or wherever I put my stop, you know, no, there's nothing that's going to be wrong with me getting stopped out of my runners. Okay, and then my second one, I like to play the range, and the third one, I like to play as that long runner, usually around It starts at 100 ticks, but I kind of adjust it to wherever I see supply and demand or support and resistance come into play. Like if I was going long out of here, let's say you scalp your first target, you play the next zone up there, and then look for the Globex high level all the way up there. Or actually, I believe that yesterday's close was this blue line right here. So I'd want to play to yesterday's close. Okay, so that's about 51 ticks. So just to make it look good, and that's where a lot of these other screenshots come from that we were referring to before. Okay, kind of like this. I know that this particular trader is pretty much copying my trade plan and my trade style, so he just he's doing what I'm doing as well, So it's usually like, okay, who got the better fill? So that kind of stuff. But looking at the crude today, which is, I'm a big fan of crude. He got 12 ticks on his first, and then for some reason he got stopped out on his second. So he got back in as he saw fit. Engulfing bar. It looks like it was a zone bounce off of a 15-minute. No, off of a 60. Interesting. So I saw that and got back in. So another 10 ticks, and he did another stop out. Interesting. And then got right back in at the like the bottom of the hour, or at 9 o'clock, and let that bad boy run for a good bit. So really good stuff there. So I do differ a little bit on this, because I probably would have taken my T2 at like 20 ticks down in this range. So I usually do like 10 and then 20 to 30 on my second target, and then a runner. So that may have looked a little bit different, but that's basically how I do it. So I hope that helps to answer that question there. And let's go ahead and get back into some of this other stuff. Are there any other questions as far as oh, you know what? I need to get into the APA 4. While you guys are thinking of other questions, I'm going to explain what's going on with the APA Zones 4, just so that you guys can kind of see what's going on there. All right, so let's do this here. Okay, so APA Zones 4 is well, it's actually pretty cool. We've made some major changes to the code again. So if you're a current user, we now have for the different zone types, which I'm not going to get into a great detail, but we have conservative APA 3, which is the old zone type, how we are drawing it, liberal, and intelligent. We've changed out the logic for intelligent. So in general, when you do select intelligent, the zones are bigger in general. Okay. The other thing that we've changed is in the APA Zones settings here, we've added a minimum zone width. So if a zone is not a certain number of ticks big, it will not plot the zone. All right. So I think the standard or the programmed deal is 2, which means so no ticks below 2 ticks in height will be plotted. All right. But if you want to adjust that, this was a user asked for feature. One of the other APA Zones users asked for this feature so that they could only look at zones that were 10 ticks in width. Okay, so I tried to do quite a bit of that type of deal in this release of the new APA Zones. So that's a big change there. The other real big change is I've done a huge thing with as far as speed goes. So the zones are a whole lot faster in how they load. Okay, so before they're pretty slow because you're just crunching a lot of data. So I figured out how to optimize some of the calculations and speed them up by a lot. The zones also are extended all the way over here to the right edge of your chart. Okay, so I know that they used to stop at just a 1 bar after the plot of the zone or the plot of price. Now they extend all the way over to the right. Just FYI, and because the zone logic is that much faster, you can also load in a whole lot more data into your chart, and it will be extremely fast to load in that data. Okay, so we can load in 90 days or 180 days or 365 days into a 15-minute chart, and it takes 1001, 1002, 1003, 1004, 1005. We'll say about 5 seconds to load in a year's worth of data, which is definitely some really big speed increases compared to the previous versions. Okay, so that is all new, and hopefully very, very helpful. All right, is there any other questions there? Now I'm also going to get into something else that we are looking at releasing here, which is the APA methodologies. Now, as I'm about to share this stuff, realize that this is the APA methodologies, so these are like that double bar and single bar engulfing deal. That's already plotted for us when you apply the APA zones to the base time frame. You'll notice that we have APA zones methodologies, methodologies MTF. Okay, so the MTF is actually really cool in the way that it works. All right, so you can actually apply this little setting to true, and you notice that 7 and 8 down here are set to zone breakout lines and entry pullback candles. So if we apply those both to true, we're going to get some arrows on our chart here. Oh, I just loaded in 360 days, so that was a lot of data, actually. That was a ton of data to load in. But just so that everybody understands what we're actually talking about when we talk about the breakout as well as the zone creation and pullback setups. This is a pullback setup, so basically we're looking for that money bounce on the zone. All right, so let's say we have a zone that's created sometime in the past, and it comes back for our money bounce, and then as price action confirms that it's bouncing off this demand zone or support zone, depending upon time of day and how long this zone has been on our chart and what time frame you're actually on. So depending upon that, it says to get in there, and you pull in your scalp target as well as your second target, and that's all being signaled off the signal bar and double bar type of engulfing candles, as well as there's a doji setup that Michelle really likes. So we put that into the logic there too. So if we have a doji inside of the zone that stalls out and then an engulfing bar or 2 engulfing bars, it'll also print out into a long setup. You are welcome, Michelle. So that's kind of how that works. And then we also have the breakout setup. Okay, so let's say we have a new zone that's on our chart. So this would be like an aqua zone, and price comes out of the zone, but the pullback doesn't come back to the zone edge, or doesn't come back to this area. So we're going to go ahead and draw a line here and say, we need to watch out for a breakout above this point. All right. So if it goes ahead and breaks out of it, that's all fine and dandy, and you can get in and apply your own type of risk management and money management to it right there. Okay, but this just gives us a little bit of an indication that there is some type of a pullback, even if that pullback's not all the way to the zone where we like to have it on the pullback setup. All right. So recommended stop placement would be obviously just below this dip, even if it's not all the way to where we want it to be. All right. So that's kind of the idea behind this. Okay. Let me take a drink here. Okay, and obviously if price never does go past this line and this zone is maybe on a really small time frame, price will break through this zone, and you never had a chance to even get filled because price never surpassed this line here. So that's the ideas of doing the breakout trade and the pullback setup. So hopefully that makes sense as to what's going on here in the grand scheme of things. Okay, so what does this actually look like on our chart? Well, that is a good question. The red arrows right now and the green arrows, as of today, I'm also looking at some legal issues, so this may change before it's technically released. But these red arrows are plotted as soon as we get a double bar engulf. Okay, so green bar is up. It's inside of a zone at this time, and we see that double bar engulf, and so we plot the red arrow down with your stop just above the high here. Okay, or your stop can actually go to where that yellow line is. That yellow line or orange line represents where the top of the zone was that the signal came from. Okay, so you can put your stop either place depending on how you want to manage your trade. And then you're looking for the next zone of opposite type for a target, for playing the range type of target. And I would also like to scalp some type of a deal down in here as well. Okay. So hopefully that makes sense. And then you can see that we had a couple different shorting opportunities. Then price came into the zone, stalled out here, and we got a long signal on the second bar that surpassed the high of this red bar here. Okay, so we got along, and it really looks like we could have stayed into this particular setup for quite a while, based upon just reading these 15-minute bars. Okay, looks like I have a question here. Is the pattern based on open, high, low, close, or chart type? I would say it's actually based on open, high, low, closed. That's really what it's forming off of. Because we are looking at the previous high of this red candle to be exceeded before we get the green signal to go long. Okay, and we're also looking at where the zone bottom is and things of that nature. Okay, so that's all the new stuff in APA methodologies and kind of the ideas behind it. Now you also notice there's a blue arrow here. Remember how we're talking about the breakout signals? That blue line, that plotted right here, this is the most current breakout signal. So when price surpasses this level, this 15-minute zone, excuse me, I'm mistaken. That's actually being pulled from a 60-minute zone. Let me pull this off of a 15-minute level instead. I just noticed that the APA zone's MTF was set to 60M or 60-minute. So let me set this back to like a 15-minute chart. We could also set it to a smaller time frame chart so that, let's say you really wanted to get a good entry down inside this zone here, you could see that potential entry. Okay. So it looks like the most current breakout signal is just above this candle right here. So this is forming from this red or this aqua zone here, and if price surpasses this according to whatever you decide your breakout rules are, which it just has, then you could get into the long position going up there. Okay. Now we do have a 15-minute supply zone that's just a few ticks above us, but you know, price has done its money bounce off this level, come down out of it, and now it looks like it's going through. So it kind of feels like the shift of supply and demand is going on again. All right. So the shift very well may be to the upside here. Okay, and this could be a wonderful breakout of that range, kind of an early breakout of that range that is being seen on our charts and in price action. There is one area of development left in the APA methodologies type of thing that's probably going to be released early next year. That's what I'm hoping for. But we are basing all of these signals off of one time frame or off of a multiple time frame that's being pulled in. I should say I'm working on something called APA strategies, or the APA methodology strategy. And basically what that does is, instead of you deciding what time frame to be pulled in here, and like maybe you have 2 or 3 different time frames or 4 different time frames, and you're doing all the filtering of making the trading decision, we are looking to put it in a strategy form to have 4 to 5 different time frames, and then every single time frame is ranked from highest time frame to lowest time frame. All right. Now the reason being is that idea of context. Okay. So if we come over here to the Paint program, and just so that you guys can understand where I'm going with this, and the level of sophistication that we're looking at exploring with this, let's say that we have a 60-minute time frame. Okay. And let's say inside of that 60-minute time frame we have a 15-minute zone up here and a 15-minute zone right here. Okay, and these are all going to be red zones here, so these are all going to be supply areas. Maybe we have, let's say we have, like, I don't know, even a bigger time frame. Let's say we have a daily time frame that looks like this. All right, and price is moving along its merry way, and it's down here, and it's actually, I need another type of paintbrush here. Okay, so price is moving along, and it decides to consolidate for a while, and then it decides to come up here and go whoop, and touches the zone. And at this point, the logic comes in and says, okay, you have 4 different time frames, your biggest time frames, you're inside your biggest time frames, you're inside your smallest time frames. Because you're inside the biggest and the smallest time frame all together in one nice neat confluence, we are going to say that this is a trend reversal short play. All right, and price action confirms it on your smallest or on your base time frame entry just below here. So you go ahead and get in, and price comes down. Okay, and it bases out here again, and then it drops even more, and it drops all the way down to demand. Okay, so we'll say our little demand zone's down here like this. All right, so you're getting in based upon 4 or 5 different time frames being ranked together, and all that confluence and the fractal harmonic patterns of these zones being played out, and you getting in off of the money bounce off of this zone right here. Okay, and all that's being displayed and plotted all into one strategy. So it's very, very advanced, and we're also, because it is a confluence of all these different time frames together, we're saying that, yeah, the trend's going up here, but because you're in all this confluence, I'm going to plot out and say that this is a counter trend play, okay, or a counter trend trade setup based upon all these time frames, price action, all this kind of stuff. All right. So And because we're also ranking all the zones, let's say that once this happens, price decides to come back up here and comes back up and retests this level. All right, we know that we have the bounce here, okay, and we know that it's signaled here, and off of, let's say, a smaller 5-minute time frame, we see a trend following bounce to the downside off of this. All right, so if it's a 5-minute time frame and price action confirms it, it says get in short right here. Okay, this is a 5-minute, and we would rank this as a trend follow because it's basing it off of maybe 2 different time frames. Okay, so this would be a trend follow type of approach because there's only 2 time frames being pulled into the equation of this zone here. Okay, now this is just concepts and ideas, but this is what we're working on, and by ranking all those different time frames together, we should be able to get logic very, very close to this after I master some technical difficulties. Sure, we can see some bigger time frames on the CL charts. I actually happen to have a daily chart, and if you guys want to join me in the APA pub, use that GoToMeeting link to register for that meeting tomorrow morning. We start about an hour before the U.S. market opens. Okay, so here's where we are at on CL right now. Okay, so I hope this makes sense here. Saw some consolidation, and this is off of daily bars, just so you know. And it looks like we're getting our money bounce on this zone. All right, but in order for us to really take play of this on a daily time frame, or if you're going to swing trade this thing to the downside, we would need a red bar to engulf this big red or this big green candle that was just put in play today. All right, but it did do that nice job of consolidating, reaching up, touching that zone. Well, actually, that's kind of odd, but it did this pattern here. This is so common, it's not even funny. Like, it bases like this and then drops down out of the zone. I think it happens more times than not. Just the way the market players like to do their thing. You'll also notice that here on a couple slides ago, as we're talking about the context of time and price together, notice a lot of times it starts to base and then it dips into a zone and it shoots out, dips into a zone, or consolidates a little bit, reaches up there one last time out of the consolidation, and then reverses in a dramatic fashion like that. So it's really interesting how this stuff just happens over and over again. So it looks like we're reaching into that zone, and you know, for a swing trade out of here, you know, you want an engulfing candle, or at least I want an engulfing candle and all that good stuff. To look at a 240-minute chart, this is what we're looking at here. Let me add some days. I don't have 20 days loaded, so let's load in 365, because it can go boom, 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 just like that. If you guys are already familiar with zone techniques, then you know, this is just an automation tool that will help you remember all these levels. And if you've been drawing them out manually, you know, now you don't have to do that anymore. So that's really nice. And it gets it really darn close. Again, it's just looking for consolidation and then expansion out of that. So that's what we're looking at on a 240-minute. And here is a 60-minute time frame. That you wanted to see there. Let me load in. Oh, it's loaded in a year's worth of data as well. So the 60-minute, there's a 60-minute purple zone up there all the way up to 99.43. And you can kind of see where we're at right now. All right, are there any other questions? Well, if not, thank you everybody for joining me today. I've really appreciated your time, and I hope this has been time well spent for you as you have been looking at the new software coming out here. If you guys want to contact me or check out the products page, please feel free to do so. Here's my contact information. Also, feel free to join us in the APAPub tomorrow, and don't forget those links in the GoToMeeting chat box if you guys want to check out any of that stuff. I've really appreciated getting to visit with you today, and hopefully it's been a good time for everybody here. So I'm going to leave the room open here for just a few more minutes in case you guys need to jot down anything or write down anything or click on any of those links. But I hope everybody has a Merry Christmas and a Happy New Year if I don't get to see you again. Don't forget, everybody that attended today is also registered for the drawing of the free APA Generations lifetime license, which will be announced January 1st of 2014. So thank you, everybody.